Hello and Happy New Year. I'm Jen Kohls of Richardson Capital Management, and I'm joined with Dan Brown, our Director of Investment Management. We are here to provide the fourth quarter economic and investment update for 2023. Wrapping up the fourth quarter, we saw stocks and bonds end in positive territory, and this is great news for investors. But what's even more interesting is to recap all of 2023. For the first 10 months, we saw stocks and bonds right out of rocky road, but then the last 2 months we saw some strong advances. Dan, to what do we attribute this change?
So Jen, as we've been talking about for most of these video clips for the past 6 months or so, the financial markets tend to follow the direction of interest rates. And for the first 10 months of the year, investors got trained to expect higher for longer interest rates because that's what the Fed was telling us. And they were also raising interest rates. And then the past 2 months, there was a pretty significant shift in investor sentiment. So with the November 1st Fed meeting, they've really for the first time signaled that the interest rate increases were probably over, and that was reinforced at the December meeting. So again, going back to those two periods, the first 10 months of the year, we saw a lot of stock markets in negative territory, at the end of October. For example, small cap stocks, emerging markets, most fixed income categories were in negative territory, and the average stock from the S&P 500 was actually just slightly in negative territory. So again, a pretty rocky period that first 10 months, and a lot of that changed the last 2 months as investors grew very optimistic that the Fed's interest rate hiking cycle could be over and that interest rate cuts could be in store sometime in 2024. So to recap the full year, pretty strong advances from both stocks and bonds, with most stock indexes up double digits.
With the strong rally in November and December, we saw asset classes that lagged the first 10 months then emerge as leadership groups. For example, there were small caps that went from negative territory up to over 24% between November and December alone.
And we also saw fixed income benefit greatly from the drop in interest rates. So fixed income posted solid returns for the year and the quarter. In fact, one of the strongest quarters on record. So just to recap the path of interest rates, the U.S. 10-year Treasury peaked at about 5% in late October. And then we ended the year with the U.S. 10-year at about 3.9%. So again, fixed income also greatly benefited from the drop in interest rates.
Many people are talking about how the Fed pivoted in the December meeting. Dan, do you mind explaining to our viewers what this means and what we learned from that December meeting?
Sure. So the pivot refers to the fact that the Fed's going to pivot from hiking interest rates to potentially cutting interest rates. So we don't think we're quite there yet with cutting interest rates. But again, the Fed kind of had a different signal and different tone to their message at the December meeting. And with their projections that they publish, we saw for the first time that they could be actually cutting interest rates in 2024, and actually by more than what investors were expecting. So the graph that we're showing here is the implied Fed funds target rate for all of 2024. And you can see over the past couple of years, the Fed is projecting a path of higher interest rates. So that's where that term of higher for longer comes from. And what we saw at the most recent meeting is that the Fed was actually projecting a decrease in interest rates by the end of 2024. So actually about a Fed funds rate of about 4.6% to end 2024. So that's where the investor enthusiasm comes from and where the thought of the pivot comes from. And if we think about what 2024 might hold in store, it's very likely that the Fed will cut interest rates, but probably not to what the investor community is thinking. So if we look at Fed fund contracts and where those are trading, those are showing that investors expect the Fed to cut rates by 4 to 5 times. And we think that's a little bit too optimistic as the Federal Reserve continues to fight inflation.
With all that in mind, Dan, what is our future outlook?
Yeah, the outlook is more optimistic now that we see that there could be a path to interest rate cuts in 2024. So first off, we're very encouraged by the fact that the rally recently in November, December has broadened out to include more categories than just a handful of large cap tech stocks. So as you mentioned, small cap stocks have participated nicely, fixed income, emerging markets, et cetera. But we think a lot of that investor optimism and enthusiasm from 2024 around interest rate cuts has been pulled forward into November, December. So we wouldn't be surprised if markets kind of paused here to start the year. And if we think about, what the economy might hold in store, we think that soft landing that's been talked about is probably the most likely outcome at this point in time. So the soft landing refers to an economy where inflation slows, the overall growth rate of the economy slows, but isn't necessarily recessionary, and there's not meaningful job losses associated with that.
Thank you for sharing your insights, Dan, and thank you for watching. If you find value in watching our monthly videos, click like and subscribe below. On behalf of all of us at Richardson Capital Management, we wish everyone a healthy and prosperous new year.